Well, hello and welcome to this BCSD Snapshot briefing. My name is Andrew Petersen and I'm the CEO of the Business Council for Sustainable Development Australia. And welcome to both an interesting conversation around the survey that we have been undertaking now for some time, and also welcome you to a different type of webinar where for half an hour we will give you an insight, as we say, a snapshot into some important business and sustainable development achievements that have been going on in the world of BCSD and its membership. Now, in doing so, let me acknowledge that this is being broadcast to you from the land of the Camaragal people, and we acknowledge their elders past, present and emerging. And we also are excited by the prospect of a conversation this year and into the not too distant future around the embracing of the Uluru Statement of the Heart. Now, today, the agenda is quite simple. What is the purpose of the survey that we've been undertaking? What has the survey found? And then what are the key takeaways? And you'll be hearing from some commentators in relation to that particular implication as well. The speakers are as follows. Ross Letz, and he joins us from ImpactInstitute, but he's been recently part of the BCSD Australia Research Intern Program and has participated with our office in relation to the development of this particular survey using the WBCSD Time to Transform platform, and has been working with us in relation to this, and we'll talk further about that in a minute. We'll also be joined by Sue Brown of Worley and also Rachel Allen-Barkis of FS Sustainability. So let's talk about, firstly, why does the survey matter? Well, this survey is one of a kind, we'd like to think, in that it is asking the question more about not what is business doing, but the way in which business is thinking about the significance of the shift that's occurring at a macroeconomic level, at a geopolitical level, at an environmental level, as a sociological level, even as the result of an economic impact. Why? Because business, as it says, affects communities and ecosystems. So we wanted to understand what was the mindset of the business paradigm going on, not just in Australia, but primarily in Australia and also in the rest of the world, about how this mindset is actually influencing the way that business is actually being carried out. So the key question that was being sought to answer was, do Australian business leaders in particular, and their perceptions and their practices align with the key shifts in the business mindset that's been identified by the World Business Council for Sustainable Development's program of work called Time to Transform. And you can see on the screen the snapshot of one of the publications called The Time for a Mindset Shift, which is the basis of this particular survey. And most importantly, we wanted to start establishing a baseline of business mindsets to measure progress over time. So as you can see also from the slide, there is an element of what would I call it, global impact in relation to this, not just from an Australian perspective, but also of colleagues, not just in the WBCSD globally, but also in the network that's right across the world. We wanted to understand where Australia's response was in relation to that. Now, the mindsets we're talking about are, we consider, three very critical business mind shifts. The first being reinvention, the second one of resilience, and the third is, how is regeneration being addressed? And let's give you some quick definitional context as to what each means. So reinvention means what is the reward of true value creation that is being generated by business rather than necessarily value extraction. And in this regard, it looks at the social and the environmental costs and benefits and whether they're being internalized by business, and are they in fact being reflected in a company's cost of capital, market valuation, and the price of goods and services. So quite granular. Secondly, the question of resilience. How is business and business leaders actually embracing change? This goes to a definitional investigation of whether a business anticipates and actually prepares for change, and then how they adapt rapidly to the circumstances to provide the greatest change of thriving over the longer term. And then finally, regeneration, this notion of looking beyond Horizon 2. In fact, how do you get to beyond net zero? How do you get to carbon positive? What does nature positive look like? In a world of reducing inequality and creating equity for all, what is the self-enabling system that needs to be put in place to actually generate that particular possibility? So to do that, I'm going to now call on Ross, if you'd like to open up both his screen and his audio, and he's going to take us through the survey findings. So over to you, Ross.
Hi, thank you, Andrew. And yeah, we can move on to the findings. So for this first question, we gave the respondents the definitions that Andrew just described for each mindset, and we asked whether they agree that their organization currently practices that mindset. So this was a very specific, direct question. And we found that 40% of the respondents agreed that the organizations are resilient, while 25% agree they are reinventive, and only 17% agree that they are regenerative. So there is some way to go. Over here, we started to break that down to compare the specific beliefs and practices for each of those mindsets. And as you can see, the respondents typically believed that businesses ought to adopt these practices. That's the green bar. But the blue bar shows that in practice, the businesses, for the most part, are not yet adopting the practices. But there is some work being made in that direction, most strongly on the regenerative side, where you can see that 46% of respondents believe that the businesses are practicing regenerative sustainability. And if we move on to the next slide, we compare the insights from the previous question with the practices. And here we see that when the respondents were given the definitions, they were a lot less optimistic about the regeneration piece, even though when asked a series of questions, which we summed up to get that score of 40% on the right there, they gave a more optimistic view. The quotes on the left are some of the qualitative comments that came out that sort of sum up the sentiment that came out of the survey findings. If we move on to the next slide, we'll see the total mindset score, comparing the average scores for belief, insight, and practice for the total mindsets, which is the average of the 3 mindset scores that we applied in the first 2 graphs. Respondents do believe strongly that business ought to adopt sustainable mindsets and practices, but this does contrast with respondents' very low rating of the degree to which the organization practices the reinventive, resilient, and regenerative mindsets. So there is a large gap that still remains between the total average beliefs in what a business ought to do and the level of adoption of sustainable mindsets into business practice. As the quote says, the intent is there, but more work to do yet. And on the next slide, we broke the data down a little bit further to look at the size of the organization. And there wasn't much difference at all between the large, medium, small, and micro organizations. You can see that the green bar shows that they strongly believe. However, the blue bar shows that in practice, they are not as strong. And that is supporting the previous results. If we move on to the next slide, we broke that down looking at sustainability experience, whether they have 1 year or less, all the way up to more than 10 years of sustainability experience. And a similar pattern emerges, although there is an upward trend with more years of experience to have both a stronger expectation as well as recognizing or actually practicing those sustainability mindsets more strongly. But the same pattern is still there. If we move ahead to the next slide, we take a look at the role type, again comparing the beliefs and the practices according to different role types. And on the left, we've got the CEO director level, all the way down through the expert stages to the support and administrative staff. A similar pattern again. The slide doesn't reveal a particular pattern, but it does show the same trend in a higher belief and a lower practice level. And that's where we are with the summary of the results. So we're going to hand over back to Andrew to continue.
Thanks, Ross, and thank you for that excellent summary. So let me welcome now Rachel Allen-Barkis of FS Sustainability and also Sue Brown and welcome you all. And let me start firstly with Sue, and then we'll move to Rachel. And the first question is, what jumps out at you, Sue, from that particular insight that Ross shared with us?
Yeah, look, a few things, Andrew. I think, first of all, looking at that difference in the thinking on, or difference in the sort of assessment of where companies are on the journey to being resilient versus, reinventive versus regenerative. And I think there's sort of no surprise, to see that resilient is, significantly higher than the other two, given that we've just come through a global pandemic. And I think business has learned a whole lot about, resilience, and are really kind of considering that issue. The gap between that and, that reinventive thinking and the regenerative, I think, is significant, and also kind of reflective of the fact that I think business has a long way to go on, and it's borne out in the kind of, the gap between practice and ambition, or belief. There's a significant transformation that needs to occur within business to achieve a lot of the large ambitions that companies have been stating. And I think, I think the results kind of bear that out. We're not quite there yet. We're tinkering at the edges. We're starting to get our heads around it, but we're not really operating in a way that's truly regenerative or truly reinventing our businesses and the way that we run them.
Yeah, and my personal reflection is that the disagree and the strongly disagree is actually quite small compared to what I thought it would be. And I think your point about resilience is an interesting one, because I think that's been as you say, the dial turner in one sense in relation to the other two elements. Let's move now to Rachel, and for your initial blush and reflection on those results.
Yeah, much in line with what Sue said, Andrew. It's not really surprising. It's pleasing that your respondents were so honest in their self-assessment. And I suppose looking at this from a glass half full perspective, as I'm wont of doing, I just think it shows that there's such an enormous scope for action and achievement, particularly around reinvention and regeneration. So, it'll be pleasing to see in years to come as you roll out this survey, hopefully some of these gaps between ambition and practice narrow as people turn their minds to what are practical solutions. I reflect as well, particularly around regeneration, the impact of the TNFD as it moves out of beta into practice, as people become more familiar with measuring and then monitoring and then impacting on things like regenerative practices, that there might be action in future, because I know it's an area of really intense conversation with people that I interview.
Well, let's go back to Sue, and the next two questions to both Sue and Rachel go to the issue of survey results are interesting, but what are we actually seeing in the real world? And firstly to Sue, because of the work that Worley does with so many different sectors these days, and so many announcements in relation to what is really quite interesting and I would argue reinvention, resilience and regeneration projects. What are you seeing in conversations with, and but more importantly, I guess, in relation to actions that you're having as Worley with your customers?
Yeah, look, I think overwhelmingly what we're seeing is our customers, which are large industrial, energy, chemicals, resources customers, the overwhelming majority of them now have big ambition around net zero emissions, be it by 2050 or sooner. So, we're seeing a lot of commitment and ambition. And I think, there is a gap, and you can see it in these results as well. There's a gap between the behaviours and the practices that are in place now and what's going to be required to actually achieve those ambitions. So they're big ambitions. It's a good first step, and it now needs to be backed up with action. And I think these findings sort of bear that gap out. These changes are going to require major transformational change in very large companies, right? It doesn't happen overnight. It is going to take time. This is a journey, and I hate to use that word because it's such a, but it is, right? You can't flick a switch and, switch the culture of what has been, an international oil company for the last 100 years to being an international energy company, right? It's going to take change. Companies are working that change, but it's a slow process. It takes time. It'll take a period of years. We need to recognise and accept that, but also kind of be watching out for when, that companies are taking real demonstrable steps towards that necessary culture change and the transformation of their business. I mean, as I said just before we came on air, Andrew, we're turning the Queen Mary here, and it's going to take some time, but I think we're seeing good first steps, good levels of ambition, public commitments, that companies are now going to be held to account for by their shareholders, their financiers, etc. So I think we're on the court, but there's still a long way to go.
As long as we're not turning the Titanic, well, maybe we should have turned the Titanic. That would have been a different movie, eh? Rachel, let's talk about the finance world, because none of this change occurs through scale unless the capital markets are moving in sync, or in some cases leading as well. What's your observation around learned experience so far in relation to the issue of a mindset shift by the finance sector, but also their observation about the corporate world as well?
I can look at this from two perspectives, Andrew, and I'll address them each in turn. The first being the investment industry, particularly the superannuation sector, because much like everything else, they're also very large ships of state. You've got multi-billion-dollar superannuation funds that are having to do the deep work of looking through their portfolios to set net zero targets, or to write modern slavery statements, to begin to grapple with the issue of biodiversity impacts and conservation. So looking purely from the investor side, investors are going through this same process themselves. They've set 2050 targets or 2040 targets. Now they're having to do that backfill work and set their 2025 and 2030 targets. And that's a lot of deep work. Some of these funds manage their money in-house, equities portfolios in-house. A lot of them work with external managers. So there's that stakeholder engagement with making sure that their external providers are aligned to these targets as well. And so there's a massive work project going on that leads to very interesting conversations aligned to purpose. Obviously, there's very specific legislative fiduciary responsibilities, but getting into conversations with super funds who are saying, well, our members are telling us that this matters, whether it's HESTA making a submission to Senate inquiry urging legislative adapting of UN DRIP to protect and enhance the rights of Indigenous peoples, and making very interesting connections with their staff, with their beneficiaries, and then with the companies that they're invested in. Then on the other hand, looking towards the corporate world, there's also the issue of sustainability-linked bonds and finance, and green bonds and social bonds. And so again, I think the thing that's been fascinating to me has been the conversations that I've engaged with companies as they are engaging with their financiers around accessing capital. And I'm having conversations with people that previously were not engaged in sustainability. So heads of treasury, for example, that are negotiating sustainability-linked loans that link patterns of practice and action to the cost of capital. We could talk about insurance as well, and the way that insurers are looking to businesses around their net zero transformation and transition. But there's conversations within conversations, but both the investment world and the corporate world from a financing perspective are learning the ways in which you can align capital outcomes to these three big questions. And it's a fascinating conversation.
The classic comment of building the plane as we're flying it. Yes.
100%.
Yes. Ross, a question without notice to you, and it's what surprised you most about the results?
Okay. Well, the most surprising result was probably that there was actually, that was on slide 10. Oh, we don't have that anymore.
No.
But what we saw was that when we gave the respondents the specific definitions, their insights were very low in terms of what they said their businesses were doing. And that was a single question for each mindset. Mm-hmm. The other scores for the practice were actually cumulative. We asked 12 questions and combined those for the practices. And so when we looked specifically at the practices, their cumulative scores came up higher, which suggests that they might be judging themselves a bit harshly. Which I guess is actually a good thing. So that really showed up with the regenerative piece, where the practice came up a lot higher than their insights of what they thought of what they thought they were practicing on the regenerative side. That said, we know that overall business is a long way from being fully regenerative, where they really are doing more than just being net zero. We're still struggling to get to net zero. With regenerative, we would be net positive and more.
Which is an interesting question to go back, particularly to Sue, but also to Rachel, and that is the issue of accountability and transparency, and particularly in an uncertain environment at the moment around what particular source of truth is. Is race to zero the thing that I should be looking at? Am I obliged to sign up to science-based targets? What the heck is nature positive? Why are we suddenly doing TNFD? And not so much the reluctance, but the uncertainty as to what the value of these particular standards, guidelines, rules are going to mean. And clearly the reluctance, quite rightly, of making any statement to the market about what they're doing. Is that something that needs to be solved quickly? And it's almost as Dorothy Dixer, in the sense that we're seeing the International Sustainability Standards Board both announced but now starting to do a lot of work. Is that going to provide business, do you think, a level of confidence and comfort about being more comfortable in talking about their mindset and the way in which they're doing? Go to Sue first.
Yeah, look, I think the advent of the ISSB and those standards and the prototypes that have been released, there is a collective, I think, sigh of relief around boardrooms around the world in terms of finally, an internationally agreed set of.
Only took how many decades, Sue? How many decades?
So I think that will be, really great step forward, and I think, as that, that hasn't come to a landing yet, and so in the meantime, companies are under pressure to make those disclosures, and need to provide the most robust and defensible, frameworks and kind of protocols that they can, and that's certainly our approach. But I know there sort of has been frustration, around the board table, around the proliferation of different things that we can disclose against, and because it all takes time and effort, and what's delivering the value. And so I think the ISSB is a great development, and I think we're all looking forward to that, actually. But the flip side of that, though, is that in talking to investors, they don't just want the metrics, they do want the story as well. And so there's also this sort of parallel piece of advice, which is, don't just hang it all on the metrics. You've got to be telling the story of your business and what this means and how you're bringing it to life in your business, and kind of, telling the story and bringing them along and putting some color around those metrics. So I don't think it's the silver bullet, but I think it is a great step forward to have an internationally agreed sort of disclosure framework. But we've also all got to be telling the story.
Well, let me just do a part two to that, because you raise an interesting point around this story and the question, I guess, of the role of governance and culture and ambition within an organisation. I was talking yesterday to an industry association, and the question that was being asked is, well, how do you embed this kind of attitudinal response into an organisation so that it doesn't disappear when the CEO disappears? And we got to the question, and this is where I'm going with the question, which is, how significant is the role of the board in embedding an ESG governance approach as distinct from just a strategy? Sue, might go to you first, and then we'll pivot over to Rachel.
Yeah. Oh, it's a bit of a curly one. I do think the board has a role in that issue of continuity with changes at, senior personnel. I can only really speak from the view I take at Worley, which is that, when you're talking about, I'm really seeing this as building a sustainability culture across our business. So in the way that we and our industries have built very strong safety cultures over years and decades, it's now the era of the sustainability culture. And that's really multifaceted. There's the public there's the public commitments, you know, that are decades long that, you know, companies are going to be held to account for. But then there's also the embedding it into remuneration frameworks, into, you know, our processes and procedures, how we develop, you know, how we deliver the work that we do for our customers, in our financing model. So it's really kind of embedding it across lots of different aspects of our business and the way that we run our business that will absolutely outlast the CEO, you know.
Yeah. Rachel.
I want to yes and that question, in fact, Andrew. So look, I mean, clearly the answer to your question is yes, the board has an absolute role. We have to look no further than the result at AGL to determine what happens when a board is not setting the leadership and strategy on climate that is aligned to stakeholders and shareholders' interests. That's just going to continue. The other thing, though, yes, it's important to have leadership from the board, from the C-suite, but I think it's also important to acknowledge that increasingly companies are seeing setting these sustainability strategies and embedding them as a way of attracting and retaining talent in the workforce. There are, you know, people who are coming to companies who would like to serve not just the company, but a broader purpose. And so it's interesting to consider the question of embedding as to whether or not this is a top-down or whether it's a bottom-up, and, you know, particularly to that resilience piece, you know, engaging with your workforce, providing your workforce with a mission as well as a strategy that they can buy into and find satisfaction in. I think it's very important to consider that aspect as well.
Pardon me. Ross.
Yeah, I'd like to just make a point there, because the work we're doing is mostly with social enterprises and NFPs, so it's more on the social side of the sustainability puzzle, which of course is critical because we have to have empathy and we have to have a storytelling that isn't merely greenwashing. And our approach is to really help each company to develop a theory of change and focus, you know, shifting from output to outcome and then through to impact. And that can filter through to the whole company, because the company might say, great, we want to set that as our goal. But then they need to still understand what for their company would be the outcome if they're going to have that impact, and work backwards from there. So once they do that, then it feeds very nicely into their marketing internally and externally. So the storytelling piece, being evidence-based, fits together quite nicely, because then they have a very robust story. And the reason I mentioned coming from the social enterprise and the NFP space is because they're often looking for funding, and the funders no longer want to hear, oh, we had an activity and we had this many participants. They want to hear, what were the long-term sustainable benefits, the outcomes from that activity? And that's what they need to put into story form. So it's evidence-based story form focused on the outcomes and the impacts. So I think that's a big piece is the storytelling, and shifting away from just telling a story to measuring and telling a story about the data.
Yes, well, our story has only just begun, and thanks to you, Ross, and your work at BCSD for the last few months, you have helped us write the very first chapter of that, and we do thank also Sue and Rachel for giving their reflections today. That's it. This is, as I said, this is a new format, which is a snapshot of what's going on in the BCSD Australia world. The results of this particular survey will be provided to the members over the next couple of weeks as we finalise its look and format, and then it will be shared on our public website probably by the end of June. For now, though, thank you so much to Ross, to Sue and to Rachel for their contribution today. Thank you to the audience who have been able to join us. Don't forget that this is being recorded and it will be put up onto our YouTube channel, hopefully by, I think, 72 to 96 hours from the date of this recording. Fingers crossed. Thank you all, and goodbye for now. Bye for now.
Thank you.
Thank you.
Thanks.